Hello, everyone, and welcome to your Onchain update for the 5th of April. So we talked about the other day the long-term holder cohort. We looked at their realized profit and loss. What we're going to look at today is the short-term holder cohort. And the reason why we're going to focus in on these folks is essentially where that kind of short-term holder threshold is on FTX. So 155 days ago, more or less, we were essentially selling off and everything, the world was blowing up and Bitcoin was dead for another 10 years. And here we are hovering around at, well, according to my block clock, 28,600. So we're not quite dead. We're not quite 10 years in the hole. But what I want to focus on today is this short-term holder cohort, just to understand what's going on their perspective. We're going to look at it from both the profit loss perspective, a bit about supply, a little bit about lifespan. So a bit of a bucket of things, but really focusing on that short-term group. What we care about is, I mean, these people bought the lows, right? Following FTX. These are people who stepped in front of a freight train and who stuck it out through a bear market and still thought it was a good idea to buy this thing. So it's not a bad frame of reference to understand their sentiment, their overall behavior, and kind of take that moving forward. So let's get stuck into it. So the first thing I want to start with is actually an on-chain activity type metric. We use these all the time. This is our momentum type formulation. Now I've got a bunch of traces here. Essentially the top one here, the blue, the dark blue and the red, this is our short-term holder transfer volume. So we're looking only at the volume being sent around by short-term holders in the yearly moving average in the red and the monthly moving average in the blue. Now, as you've seen with these before, essentially blue above red, good sign, blue below red, not so good sign. So you can see that we are in the process of punching up above this level. We're not quite there yet, but it's getting there. And you can see that once we really get that momentum, it tends to stick the landing. We tend to stick there for some time. Now, 2019, this thing here crossed over very, very early in the piece, and we were hovering around about $5,000. So this upwards momentum, once it gets going, it's actually quite responsive because naturally there's transfer volume. People get excited. That first rally kind of wakens the beast. And as you can see, we're kind of just on the uptick now. Now down at the bottom here, just for comparison, we also have our long-term holder cohort in the light blue and the pink. Very much the same, but you can see that their transaction volume tends to respond afterwards. So you can see that we get the short-term holders start to tick over, and we get the long-term holders come through just that little bit afterwards in terms of their overall momentum. You can also see it's a little bit more jarring. Many of their metrics are a bit more kind of you can kind of see there's a lot more oscillation in through here. And the reason why that is because you've got top buyers. Short-term holders, essentially liquid coins moving around, following price. And that's actually why this is higher. They're on the same axis. Short-term holders have lots more volume. This is on log scale, by the way. You can see short-term holders is in the billions of dollars. Long-term holders is in the hundreds of millions. So we're talking about an order of magnitude difference. And what you'll see here is a lot more sporadic spending, the occasional large batch of coins, the occasional 200 BTC, a large custodian or an institution pulls their coins out of a custodian. Long-term supply is a lot more sporadic, whereas short-term is a lot smoother. But either way, both of these are in the process of breaking higher. Long-term holders typically, as we know, start spending near market tops. And you've got in the background here, these blue colors when both of them are in positive momentum. And you can see this is not a bad little indicator for picking up periods where we are in fact in some kind of a bullish market, right? Obviously there's some false signals, but that's the nature of the beast. We actually don't have a flag on both of these yet. So one interpretation of this is that we are still in a bear market. There's another interpretation of this thing, which is that we are only literally just at the $5,000 level that we saw back in 2019. My read on this thing is that we're probably going to see something closer to 2019, where we get some kind of upside momentum, and then we go through a probably multi-month bear is back, sideways, but probably to the downside type chop. That's my gut feel. I think that's more likely. Everybody's going to get a little bit too excited. We'll see altcoins go for a bit of a run, and then I suspect we will go back into a bit of a chop and churn. But again, who knows? Maybe they're going to start printing money like crazy, but I think we have to have another down wave before that probably really starts to kick in. That's just my gut feel. These things never go in straight lines. So one last thing I'll do just before I move on from this, short-term holder threshold. This is a snapshot of where that 155-day threshold is. You can see we're literally on the precipice of breaking down into FTX. So the nice thing about that, short-term holders is everybody post-FTX. Long-term holders is everybody pre-FTX. It's a nice way to kind of break it down. Now we can actually see this in the URPD. Now, by the way, hands up if you've got coins over here, because I'm certainly up in this mix. I got a couple. I think 50,000 was the highest I ever bought UTXOs at. I wasn't a buyer up above there, but nevertheless, some of my coins are sitting up here. I mean, these are some seriously hardy folks, right? They've seen the whole thing, and they're not doing anything. But you can see the scale of how much coin supply. These blues, all these blues here are the pre-FTX. Let me just go back one level. This pre-FTX, post 3 arrows, pre-FTX. That is essentially what these blue coins here are. That's the supply there. All of this are people who bought lower than that. You can see there's really not that on the relative scale. Most of the coins that are below us are much, much below us, right? This is like 20, that'd be about 25 or 24,000 is kind of the upper bound of this thing. So most of the coins have not moved from when they're required back in that zone. There's only a little bit of a volume profile here that's following it. So to me, the amount of profit taking is actually quite insignificant, to be honest. These guys aren't doing anything. These guys aren't doing anything. And these guys so far haven't done much. So it's giving us a bit of a view on sentiment. I do believe people expect that this thing will go higher. They're not willing to take 28,000 just yet, at least not at any kind of significant size. So now we're in short-term holder realized profit and loss. So this first chart here is the net realized profit and loss for short-term holders. So there's a couple of things. 2019, we got to a high of 14,000. So at the peak of that little miniature bubble, we are currently double the price of there. So as we know, Bitcoin, I mean, you can see here, right? 2017, 2018, back then, this was the all-time high in capitulation volume. This was the all-time high in bull market volume. Now it pales in comparison to our $50,000, $60,000. So the market cycle gets larger by, not necessarily an order of magnitude, but much larger. So here we are at the moment. We are kind of getting to this $8,000 level in dollars, despite the fact that we are literally twice as high as the top of the bubble. So what that tells me is on a relative scale, and we'll look at this on an actual relative chart because I'm not just making this up, the amount of profit taking is actually quite small. It's really not that significant. So that's certainly something I've got my eye on. And in the background here, maybe a little bit hard to see, but there's a ghost trace here, which is the long-term holders, just to kind of compare the two. And they are also in the process of breaking into profit as well. So nevertheless, it's quite small relative to the size of what Bitcoin currently is. So this is now moving into the relative time frame. So here we're looking at it on a BTC denomination. So what is the profit and loss in BTC terms? Now we can truly compare it across market cycles. So you can see here where we currently sit, we are pretty much where we were at the $5,000 level, right? Same level. This is pretty much where we were breaking through on our momentum chart. Now, again, that doesn't mean that we're at $5,000. But what it also tells us that the amount of profit taking so far is pretty small. So, and by the way, I'm not sure how many of you were there. Do let me know in the comments, by the way, if you were there for this 2019 rally. I know I've spoken about this before. We are currently coming up to the cycle baseline. Back in 2018, it was $6,000. It was this floor that we hammered and we hammered and we hammered, and then we finally busted through. Now, as we came up to it, just as a bit of a history lesson, the West didn't know that there was the plus token Ponzi going on until we were somewhere up here. So the plus token Ponzi was a relentless spot bid in China. Now, this is a time when derivatives were only just growing up. Lots and lots of Western markets were short to all hell. This is a short squeeze. So many people on BitMEX were short like you wouldn't believe, but they didn't know that there was a huge spot demand going on in the East. So what happened is that plus token Ponzi squeezed us higher, driven by people who are like, no way, this $6,000 floor, we beat our head against this for, a year. There's no chance it's going to break on the first chance. Well, zip, straight through it. Now we are currently coming up to 29,000. Now, I don't know about you, but this to me feels like the cycle floor from this cycle, right? You could argue maybe it's 30,000 or 32, but 29 was a key psychological level. It caught this final dip here. It's where we hovered around before. It makes sense we're going to get some kind of resistance. All these things are a zone anyway. So here we are with several metrics at the same relative amount of profit taking going on. We've got the same kind of momentum chart going on. There's a couple of things saying, well, what happens if there's a relentless spot bid and a bunch of people go real short? So maybe we'll touch on, in fact, tomorrow we'll do a video. I'll focus purely on derivatives and actually cover that angle because obviously, can't do everything in one video. But just giving you a bit of a sense of scale of where we are here, it's possible. It's possible that we're somewhere at that 5K, 6K type realm as an equivalent. Again, history is never going to repeat, but it's certainly going to rhyme. Here's a relative chart on long and short-term profit and loss. Long-term is obviously in blue, short-term in red, light colors are in loss, dark colors in dark colors are in profit. You can see that we've got this huge spike down in short-term holders in profit. Finally, their spending is back in profit, and that's because literally the price is now above all of them. By definition, except for the guy who bought just then, everybody who's a short-term holder is pretty much in profit. It's pretty hard to be at a loss when you're at all-time high over the last 155 days. But you can see that this same kind of massive increase in short-term supply happens towards ends of bear markets, right? You see all these guys come back into profit. And why? Because, well, price gets above the massive accumulation that just took place. We saw a changing of hands down there in that FTX zone to these short-term holders, of which many of them are not short-term holders with inverted commas. They're hardcore that stuck through the whole bear and bought the dip, right? These are hardcore people. So, in many ways, it looks exactly the same as we had back here in 2015. Volume we had a look at. So in terms of looking a bit more into the profitability side of things, so this one here is basically the percent of transfer volume by short-term holders in profit. You can see that we have moved into that profitable realm, but this kind of makes sense because we are literally back up and above their level. This one here is kind of nice. This is our short-term holder profit and loss ratio. So basically looking at all the profits and the losses. These two can really be read in conjunction. I mean, there's a couple of things that stand out, right? This ginormous spike here. This, by the way, is the momentum of this thing here. So really what we're looking for is show me a cyclic change. Show me something that really, we're in a new regime. Well, this capitulation here, right? New regime because we literally rallied to all-time high. This rally here put us into the 2019 event. This one here started the 2018 bear market. These very, very sharp peaks is telling us that the market's gone, whoop, we're suddenly no longer profitable. Short-term holders are now deep in the red, or they're now deep in the green. And you can see here the power of this move is actually the all-time high. This thing here accelerated from losses to profits in the fastest rate it ever has in history. And we've kind of maintained that level. So generally speaking, it feels like we have a regime shift that is probably underway. And it really comes off the back of that amount of accumulation that we saw in the URPD and we've talked about over recent episodes. And that's kind of it. In terms of the primary things that I wanted to cover today, they're the main things. I think I was going to have a quick look at lifespan. Yeah, one last point that I want to touch on is we talked about how long-term holders are kind of pretty flat. Their overall transfer volume, it's picking up, but it's not significant. Short-term holders, there's obviously a boundary of those, right? Short-term holders, there's short-term holders who just bought, right? Within that 155 days, there's some guys who've held their coin for 2 days and someone who's held their coin for 154 days. The longer that time is, right, the more they're willing to hold on to their coins, but they're finally taking profits, right? So overall, both of those groups, long and short term, if they're spending older coins, it means they're taking bigger profits, generally speaking, or they're panicking out, but they're selling stuff that is more dormant, and the more dormant a coin is, the more the market has discounted it. I don't think about Satoshi's coins ever, right? Ever. Not concerned about them. I'll tell you what, if they start getting spent, I'm going to think about them. So coins over time, the longer that they're discounted, the market in all of its infinite wisdom slowly discounts long lost coins. The longer that a coin is dormant, the more likely it is to stay dormant. So this is a really long-winded way of saying lifespan metrics like Coinday destroyed, dormancy. What do we care about? Well, we care about high spikes, right? Upticks means old stuff's getting spent. Low levels means that not much old stuff's getting spent. Kind of simple, really. Now, in our current environment, we've got a nice little pullback. Coinday destruction is really down. I mean, it's pretty much at cycle lows. Short-term holder Coinday destruction, we saw a bit of profit taking on the rally higher, has pulled back quite a bit. We're in very much a consolidation range, but those who bought down near FTX, which is the oldest short-term holders, are choosing to stay pretty static. Long-term holders, I mean, there's just nothing happening. So overall, this feels like a bit of conviction. I have to say, it looks more bullish than bearish. This is our 90-day sum. So how many, and given we're pretty much at the end of the quarter, how much Coinday destruction occurred over the last quarter? Now we've got orange, which is the whole market, blue, long-term holders, red, short-term holders. Now, all and long-term holders is pretty much at cycle lows. There's been very, very little Coinday destruction. The bull market stand out like a sore thumb. This here, very, very little Coinday destruction. So long-term holders, really, there's not much going on. Their transfer volume's down. There's not too many long-term holders spending. Short-term holders, tiny, tiny little uptick. So again, it's kind of giving us a bit of reinforcing that there's just not that much happening on many of these different levels. I can probably leave. I don't think there's too much going on here. No, that's pretty much it. These ones here, I was playing around with these. These are Coinday or Coin Time NVT and RVT ratio. So NVT and RVT is obviously comparing the market size. NVT is network value or market cap divided by transfer volume. RVT is the realized cap divided by transfer volume. Well, Coindays are just a time and volume weighted volume. So what these are doing, looking at, is how big is Bitcoin relative to how much time volume is being spent. That's pretty much what these are looking at. So if it's high, it basically means that you have a large market relative to the amount of time that's being spent. It's bearish, more bearish than bullish. But when do you see the most bearish levels for long-term holders? At the absolute bottom. These low levels or these big downtrends are saying that there is increasing volumes of coin time getting spent. You're seeing Coinday destruction growing and growing. When's the maximum Coinday destruction? At the bull market top. So even though we see high levels in bears because there's very little coin time being destroyed, high levels in bears is actually, I mean, everything, the worst day of Bitcoin's history is literally the worst day of Bitcoin's history. It literally got better from that point onwards. And we are currently hovering around relatively low levels for long-term holders. We're at low levels for the aggregate market, and we're at low levels for short-term holders. So by and large, Bitcoin, by pretty much every metric that we're looking at on the short-term holder basis, to me, saying that short-term holders who bought the lows, pretty experienced, pretty hardcore folks, are really, really unfazed. It's amazing to watch. But essentially, conviction looks remarkably unchanged. It looks good. I mean, you know, I'm yet to kind of find too much that's got me wary. But anyway, tomorrow I'm going to follow up with a session purely looking at derivatives. We'll look at leverage and, you know, all that kind of stuff because, as I said, that $6,000 floor was a learning point for me. And you just watch people get squeezed in a big way. And we're pretty much at that level. So hopefully we don't squeeze between now and then, but who knows with this market. Anyway, I'll see you in the next one. Cheers.